What if you nailed every technical question in the room, then lost the offer because you couldn't explain one distribution waterfall clearly? Real estate fund accounting interviews test more than debits and credits. They test whether you can translate property operations into investor reporting under pressure. I'm from this channel, and today we're breaking this down simply. By the end of this video, you'll know how to explain NAV drivers, walk through key journal entries, and handle Yardi-style reporting questions. Real estate fund accounting is the system for recording property and fund activity, then converting it into investor-ready financials like NAV, capital accounts, and distributions. In interviews, clarity beats complexity. If you ramble, they assume you don't own the process. Anchor your answer with outputs. I support monthly close, property-to-fund consolidations, and investor reporting. To put this in perspective, a $500 million fund with 12 assets might have 12 property closes, 1 consolidation, and 1 NAV package every month. Mention key statements, balance sheet, income statement, cash flow, and partner capital roll forward. NAV is the fair value of the fund's equity. Assets at fair value minus liabilities allocated to investors. Interviewers want drivers, not theory. The biggest levers are property valuation changes, operating results, debt paydowns, and fees. For example, if a property's appraised value increases by $10 million and debt stays flat, NAV increases roughly $10 million before taxes and accruals. If the fund has 100 million units, that's about 10 cents per unit. Also mention timing. Many RE funds strike NAV monthly or quarterly, while appraisals might update quarterly with monthly roll-forward adjustments. And here's the part most people completely ignore. NAV quality is only as strong as property-level close discipline. Interviewers love hearing controls. Talk about a standardized close checklist. Rent roll tie-out, bank rec, prepaid amortization updates, accruals, and variance analysis. For example, if CAM recoveries are understated by $200,000 because billings weren't posted, NOI is wrong, and valuation models that capitalize NOI at 5% could misstate value by $4 million, $200K over 0.05. Explain how you reconcile subledger to GL, rent roll to revenue, and property cash to bank statements. This signals you understand the upstream inputs that drive downstream investor reporting. Expect walk me through the entries questions. Be crisp and use numbers. Funds often maintain GAAP books, but report metrics investors care about. Name the differences. GAAP includes straight-line rent, amortization, and accruals. Investor packages often emphasize cash NOI, EBITDA, and adjusted FFO-style measures. For example, a $300,000 tenant improvement might be capitalized and depreciated over 10 years under GAAP. $2,500 month expense, while cash reporting shows the full $300,000 outflow when paid. Another classic difference: unrealized gain-loss from valuation changes hits NAV, but not operating performance. In interviews, say you can reconcile GAAP net income to cash-based metrics and explain why both views exist. Now here's what nobody tells you about real estate fund accounting interview Q&A. They're not testing whether you can click buttons in Yardi. They're testing whether you understand the data. Reconciliations are interview gold because they prove reliability. Talk through the 3 most common: bank recs, cash to GL, and intercompany. For example, if the bank shows $2,150,000 and the GL shows $2,120,000, you explain timing items like $30,000 in outstanding checks. For intercompany, explain how a fund might pay $12,000 of insurance on behalf of a property entity. Property books an intercompany payable, fund books an intercompany receivable. Then you eliminate at consolidation. Mention you investigate unmatched items over $5,000, and you track aging 30, 60, 90 plus days because old recom breaks audit readiness. You will get questions on fee mechanics. Keep it concrete. A management fee might be 1.0% annually on commitments or NAV. For example, 1.0% on $200 million NAV is $2 million per year, or about $166,667 per month accrued. Debit management fee expense, credit accrued liabilities. Acquisition fees could be 1% of purchase price. Buy a $50 million asset. Fee is $500,000, often expensed or treated per the agreement. Also, mention allocations, audit fees or admin costs allocated across properties by square footage, revenue, or headcount. Interviewers want to hear you verify calculations against LPAs and support with schedules. Explain capital activity like you're talking to an LP. A capital call creates investor receivables and increases contributed capital when funded. For example, call $10 million across investors. Debit due from investors, $10 million. Credit capital contributions, $10 million. When cash is received, debit cash, $10 million. Credit due from investors, $10 million. Mention tracking by investor and class, and tying cash receipts to the call notice. Also, highlight controls. You confirm wiring instructions, match amounts to the notice, and investigate short funds quickly, like an investor wires $980,000 against a $1 million call. Waterfalls are where interviews separate accountants from fund accountants. Start simple. Return of capital, preferred return, then promote catch-up. Use a number. For example, investor A contributes $5 million with an 8% pref. After 1 year, the fund has $700,000 to distribute. First, pay pref, $400,000, 8% of $5 million. Remaining $300,000 might go to return capital or a catch-up tier, depending on the LPA. You don't need to memorize every structure. Just explain you follow the LPA, maintain a waterfall model, and tie distributions to cash availability, lender covenants, and approved calculations. If the role touches REITs, clarify differences. REIT reporting often emphasizes per-share NAV, EPRA-style measures in some markets, and recurring cash flow metrics, while private funds focus on partner capital accounts and waterfalls. For example, a REIT with 50 million shares and a NAV of $1.25 billion reports $25 NAV per share. Private funds might report NAV by investor class, with different fee loads. Also mention REIT distribution expectations. Many REITs target high payout of taxable income, while private funds may retain cash for CapEx. Interviewers want to hear you can tailor reporting to the vehicle and audience. Consolidation questions. Test whether you can connect entity accounting to reporting. Explain that each property may sit in an SPE, rolled up into a master fund, then into a reporting entity. You eliminate intercompany and align charts. For example, Property A owes fund $2 million in intercompany. Those receivable payable balances must eliminate to zero at the consolidated level. Mention minority interest too. If the fund owns 80% and a JV partner owns 20%, you allocate results accordingly. Interviewers listen for terms like eliminations, ownership percentage, controlling versus non-controlling interest, and tie-outs to supporting schedules. Audit readiness is a hiring priority. Say you maintain roll forwards, fixed assets, debt, prepaids, accruals, and partner capital. They will ask, how fast can you close? Don't bluff. Explain a realistic process. For example, property closes by business day 5, consolidation by day 7, investor package by day 10. Mention what you do daily versus monthly, daily cash monitoring and exception items, month-end accruals, reconciliations, and reporting. Add how you manage bottlenecks, late utility invoices, missing rent rolls, appraisal updates. To put it in perspective, shaving 1 day off close across 12 properties is like recovering 12 workdays of capacity. Emphasize prioritization, checklists, and clear escalation. Behaviorals are where you prove judgment. Prepare stories with numbers. Now you understand interview-ready fund accounting answers. But there's one thing that can undo this progress: not knowing how to defend your numbers when someone challenges your assumptions. Make sure you don't miss our next breakdown. Subscribe and hit the bell so you never miss an insight from this channel. Drop in the comments. What role are you interviewing for? Property accountant, fund accountant, or NAV reporting? Thank you for watching. Please like and subscribe for more content.